Welcome to this InsurTech webinar. I'm Oisin Mearns, editor of InsurTech Rising. We will be live tweeting this webinar, so you can join the conversation using the hashtag InsurTechWebinar. So, from customer engagement and underwriting to claims handling and fraud detection, few areas of the insurance industry will be left untouched by developments in AI. But where do the greatest opportunities lie in the near term, and what steps should insurers be taking now to make sure they can exploit them? This webinar will be addressing how the data-rich insurance industry can harness AI and machine learning to work more efficiently, improve risk management, and tailor product design, accelerating the shift towards personalised insurance. Today, I'm joined on the line by Mark Broadhurst, who is Head of Insurance EMEA at Intellect, Mark Andrews, who's Domain Director General Insurance at Altus Consulting, and Dror Katzav, Co-founder and CEO of Atidot, to discuss getting practical with artificial intelligence. Welcome, everyone. So before I hand off to Mark Andrews, who's going to provide a brief overview of developments in AI, I'd like to remind you all listening that we'll be holding an interactive Q&A. If you have any questions during the presentation, you can send them to us using the Ask Question button at the bottom of the screen. So without any further delay, I'll hand off to Mark Andrews, who's going to give us some opening remarks on developments in AI.
Thanks, Oisin, and good afternoon, everybody. So I've been asked to give a quick introduction into artificial intelligence just to set the scene and to give some examples of where we are seeing some developments in the insurance industry around AI. So thinking about the more practical elements and the near-term possibilities, I'd like to talk about two particular areas around process optimization and customer engagement. So cost savings are clearly very important for today's insurers, given it's such a highly competitive market, but it's not just about cost savings. Speed and accuracy of decision making is just as important, and that's where computers can often win over humans. So the practical elements of AI I want to expand on are where machines are essentially making decisions for us, be that simple routing or triaging decisions, or the more complex decisions based on large data sets and statistical analysis. Some of the things we're seeing, so in the claims space, we're seeing some really smart claims analysis, particularly in the motor industry, to assess accident damage. Photos of damaged cars were traditionally handed to claims advisors, can now be analysed by software to determine very quickly as to whether the car is a total loss claim or if it needs to be sent to the body shop for repair. When it's at the body shop, further analysis can then be carried out on perhaps a panel-by-panel basis, assessed against a huge set of historical accident data, and then the loss adjustment can be carried out accordingly. So from an insurer perspective, this can speed up claims decisions, reduce claims leakage, and even help to determine liability in some cases. So given there's more than 1,000 or so new car models coming through from factions every year, insurers are pretty up against it to assess potential repair costs and by association the risk and the premium as well. So AI can do the natural language processing or the hard work of reading and processing all the new information to understand these new car models in order to help the underwriters determine what action to take. So with the new technology built into some modern cars, these changes can be quite significant. To give a quick example, the new laser headlights used for automatic braking and lane detection on some modern cars cost close to £10,000 a pair these days. So what used to be a traditional fender bender accident can be significantly more expensive, not just to repair and put the replacement parts in, but also it's a recalibration service. Moving into the the customer engagement space, a lot has been written on the subject of chatbots, often restricted by the regulator in some other areas of financial services, such as wealth, in what they can actually achieve. I think the insurance industry could go a lot further. Customer engagement scores are traditionally pretty low in insurance, so we could look at new ways to interact with our customers, particularly our younger customers, who don't often want to speak to a human, but would rather interact through their smartphone. So in the distribution space, chatbots are available to help customer acquisition, mostly through simple decision tree engagements. The true natural language processing is really quite hard and would need significant investment, but keyword matching is much easier, and perhaps a well thought through customer journey could lead to automated sales for a certain segment of untouched or unloved customers. And moving back to the claim space again, chatbots are often used to automate some of the low-level claims, such as damage to single articles that can now be pushed straight through, leaving the customer services guys to deal with some of the more complex claims. And that's where the NLP side of artificial intelligence comes in again. There's one more great example in the travel claim space where flight delays are being paid out before a customer has even made a claim. That's true progression there. So there's a couple of examples there. I mean, pricing and underwriting colleagues and the risk and compliance teams are going to be the areas of the business that are most nervous about this progression. But there could be a potential danger of computers picking up and acquiring big pools of unwanted risk, or making claim decisions that could result in even bigger leakages. So there's a couple of examples. There's more areas, and no doubt you'll hear more from our other speakers now.
Great, thanks, Mark. That's a very interesting kind of big picture view of where things might be headed for insurance. I suppose I should just remind everyone one more time, if you haven't already done so, start submitting your questions using the button at the bottom of the screen. But let's take a little closer look at where some of the opportunities lie in the near term. So, Mark Broadhurst, where do you think the greatest opportunities lie in the near term for AI with insurance?
I think I'd probably narrow it down to 4 key areas. I think underwriting is the first, Ocean. Automated underwriting can be achieved by harnessing the insights of data. This includes the Internet of Everything, as well as structured and unstructured data. I think the main classes that will benefit from that will be probably the likes of auto, home, SME, commercial, property and casualty, life and health, and also on a group level for life and health. I think that there is opportunity there within the underwriting space. Within the claims space, big data, I think, will play a major role in portfolio level analysis. I think at the moment we do very little around that. A carrier has the opportunity to embrace and deploy Internet of Things sensors to monitor risks and prevent potential high-risk claims. I mean, Aviva, you've probably seen, partnered with LeakBot. Good example of how the industry is beginning to embrace this very point at maybe a binary level, but again, that just gives an example of where it's going. Portfolio analysis and renewals management seems to be an obvious low-hanging fruit. I think artificial intelligence can provide better risk management and change the risk dynamics and also financial reporting at a portfolio level. There's obviously the fraud factors that can be reduced, and also automating and simplifying the claims process. The third area would be financial advice, robo-advice. Following the retail distribution review, we've seen this advice gap and savings gap in the life and pensions market grow, and many consumers becoming disintermediated from advice. There's an immediate opportunity to help these disintermediated customers to offer financial advice by identifying their financial needs and providing a more artificial goals-based planning. I mean, LV, Wealth Wizards, another example of some emerging trends in that market. The last is probably customer servicing. I think insurers could enhance the customer journey by embracing the power of structured and unstructured data, particularly social media, by providing behavioural analysis and predicting customer needs and aligning interactions to lifestyle events. So we've talked about world-class service. I think we're nowhere near as an industry, and I think big data and artificial intelligence will really bring that to the fore. So the 4 areas for me, just to summarise: underwriting, claims, financial advice, robo-advice, and customer servicing.
Thanks, Mark. Dror, did you have any thoughts on where the greatest opportunities lie in the near term?
Thanks. Thank you, Ocean. First of all, thanks for the opportunity. I think it's a very exciting time for us who deal with AI and machine learning on a daily basis to face challenges like the ones insurance brings along. Because as we see it from our perspective at Atidot, the insurance industry touches almost every aspect in your day-to-day life, from your personal behavior, to your financial behavior, to your family's behavior, to your professional behavior, and so on. And I think there are some of the greatest opportunities for the company. The company has been for years building systems to support the operational side of insurance, how to do better marketing, how to do better underwriting, how to do better cash flow management or claim management, and so on. And the system was never built for analytics and data collection. And what we see from our perspective is when you go back to those systems and use the new techniques, bringing NLP and AI and data science and big data into those systems and rethink about that data once again, it shows you a lot of insights about your customers that you wouldn't have known otherwise. And I think if we speak about low-hanging fruits, and some of the topics were raised by the previous speakers, many of them lies just in your data. From the question your customers already answered, from your previous engagement with the customers, you might not have the right skills to analyze this data sources, or you might not have the right methodology to use those insights, but this is where most of the information lays. And we saw that if you take this into account and you find a way to connect it back to actuary and underwriting, you can get a significant value to the company.
Thanks, Dror. I think you're right in saying that it is, of course, a very exciting time for those interested in artificial intelligence. But, we've heard a lot about artificial intelligence before. This excitement around its potential is not really new. So, it would be interesting to hear your thoughts on what's different this time. Perhaps we'll go to Mark Broadhurst on that one.
What's different this time? I think the convergence of several factors, Ocean, are almost creating the perfect storm for artificial intelligence. If I summarize it again into some sort of bullet points, deep learning would be the first area. The previous efforts from modeling of expert behavior were far too sort of domain orientated. I think insight driven from patterns was never going to be enough to unlock the potential of Internet of Things. Regression modeling seems to be a dwindling and dying breed due to its limitations. Just merely estimating the relationship between statistical variables isn't going to be sufficient in the future, in my opinion. I think neural networks are the emerging trend, thinking like a human brain. And this capability has massively enhanced itself over the last few years. We're seeing depths of 4 levels going to 150 layers in such a short period of time. We're seeing experts and knowledge in that domain sort of based environment being superseded by sort of data and computational power. This alone is powering the fintech innovation, in my opinion, and again is transforming the market. So we're moving away from expert and knowledge in domain-based environment, and we're really bringing that innovation factor in. Then we have all the other emerging technologies, voice recognition, Alexa, etc., Siri, emotional technologies, natural language processing, conversational sort of chatbots and talkbots, and then obviously the Internet of Things, which we've already covered. And that's giving us a rapid rise in sort of the deep learning capabilities. The second is the explosion of data. Data is the Internet of Things has become the Internet of everything. We all know, we're all probably familiar with Buckminster Fuller, created the knowledge doubling curve. So all human knowledge, everything that we ever know, was doubling every 100 years. Then at the end of the Second World War, it was doubling every 25 years. The current rate is doubling every 13 months. I think IBM predicted that the Internet of Things will see this change to every 12 hours. Different knowledge is changing at different rates. Nanotechnology is doubling every 2 years. Clinical knowledge, probably every 18 months, I think was the last figure I'd seen. So it depends on what type of knowledge, but the bottom line is all knowledge known to man is increasing at a rapid rate. A transition from the linear growth of human knowledge to exponential growth is taking place right now, and I think those that capitalize on that will do well. The third factor is The actual hardware itself, I think the computational hardware is now scaling. So graphics processing units have improved dramatically over the last 30 years, and we're seeing the impact that they can have on artificial intelligence with companies using that parallel tech computational ability within their businesses at quite low cost. Open source is the next. So we've seen Google's TensorFlow. We've also seen Watson's develop a cloud. The science behind these enable a company to really jumpstart its AI capabilities. And then take Kaggle, for example, who've now outsourced data science itself, keeping your engineering practice in-house. And the last is data. And the data model has been completely flipped on its head, in my opinion. We're seeing the EU data protection regulations change the landscape for organizational data custodians. Organizational data will need to be made more transparent and available at consumer level. And this trend will tip the balance back to the individual. Using data to create sophisticated pricing and risk management, I don't think is going to be enough. Sharing of data and incentivizing the customer and building trust with them is where the future lies. And lastly, I'd say that empowering customers to manage their data and privacy is probably the way that we can do that. So to summarize, deep learning, the explosion of data, computational hardware power and open source AI software, and the changing landscape around data is creating the perfect storm. And I think for the first time, artificial intelligence will be the big game changer.
Thanks, Mark. A lot of food for thought there. We've got a lot of questions coming in. This one for Mark Andrews. Many insurers, especially the larger ones, struggle with the state of their technology, often due to acquisitions over the years. How much do you think this is going to hinder the development of intelligent applications?
Okay, so I agree. There's some pretty complex estates out there due to the mergers and acquisitions that have happened, and I think what we're seeing with some of the earlier developments is just simple, clever workflow, which is a challenge in itself, trying to hook into all the old legacy software. It will hinder development of AI, and I think perhaps where some insurers should be looking is outside of their organisations to form partnerships with some of the InsurTech startups to help launch some of these new ideas, rather than trying to embed it in some of the existing complex legacy estates.
Great, thanks, Mark. Dror, maybe get your input onto this one. How difficult will it be for the insurance industry to move from those legacy systems to more data-driven systems?
I can share from our experience at Atidot. We've been working with insurance companies, and we encounter those systems on a daily basis. And basically, what we see is that the legacy systems, I think the key issue is that to get the data out of those systems and prepare them for AI and modeling is nowadays is quite a tedious manual labor that costs you a lot of money and a lot of time. And basically the biggest challenge is because of the difficulty, many companies just decide not to do it, or just decide to take limited amount of data or limited amount of data points for the later modeling, and I think this is where data science and AI can help you solve those issues. For example, one of the things we ended up developing is a tool that goes into those systems and uses AI to understand the insurance essence of the data lying in those systems. So again, it's not using AI, for solving an insurance challenge, but actually solving an IT challenge and helping us pre-process the data and understand what is the insurance essence of that data for later modeling.
Is there any way insurance companies can remain competitively relevant while using those legacy systems, Dror?
I think so. I think Mark mentioned a few companies trying to develop a data cloud or a data lake that helps the companies use data coming from those legacy systems and remain competitive. And I think it's not just speaking about those legacy systems. It's speaking about the framework that the companies are willing to build on top of that. So you can't really throw those systems out of the window. It won't be a reasonable claim, and you have to find a way to use those systems as part of your structure while going forward. So again, you see companies, we are one of them, developing a platform that goes on top of those systems and help you get that advantage that lies in those systems while doing models and while answering the questions we talked about, like claim management and customers' value and customer engagement and so on.
Thanks, Dror. Got an interesting question here, perhaps one for Mark Broadhurst. Have the traditional carriers got the right culture and financial agility to embrace the pace of change?
Well, thanks for throwing that one at me. I mean, I've obviously made quite a few speeches on this at various conferences. I mean, I think coming from Aviva 20 odd years, I mean, I think I understand this very, very well. I think the first issue really for me is the financial barrier and the risk-averse attitude. Following the financial crisis, the need to have complete transparency over return on investment, I think, hinders and stifles innovation. This culture leads to almost a reactive investment philosophy and fails to capitalize on the potential growth of the early adopters and InsurTech innovators. I think another cultural problem is that surrounding the fear of reputational brand damage. Whilst I'm not advocating removing risk management within a business, I believe that the current risk management processes fail to appreciate the potential impact of almost an Uber-esque revolution in the insurance space. The next issue I think that they'll have to face up to is the traditional one of the differences, the cultural differences between traditional insurers and technology startups. I think for me this is one of the biggest challenges facing the development of InsurTech market. Traditional insurance companies lack a culture of innovation, and they fail to even start creating organizational people structures, for example. Many traditional providers, I think, see fintech startups as disruptors. I think I would say that they need to truly embrace them as enablers rather than disruptors. We're seeing change, but I worry about it. I think the pace of change, Ocean, is far too slow. Only a handful of providers, for example, have partnership alignments with fintech providers, and they are really beginning to show what they can do and how they can innovate and transform. I think the future will be innovation hubs and partnerships that perhaps sit outside of the business. I'm seeing Aviva do that really with their digital garage, allowing the core business to continue whilst the satellite is able to be innovative in a more of an unfettered environment. I think the majority are watching and waiting for the miracle cure out of the box, and I think they could become disintermediated if they're late entrants. Marketplace solutions is probably the latest craze in the banking sector, aligning sort of package solutions for the consumer with multiple stakeholders, providing capability aligned in a much more holistic model. I think that's a growing trend in banking, and I'm not really seeing that as quickly being established in the insurance vertical. I mean, AXA and Trove is a good example of where it is happening. They're obviously targeting UK millennials with customized home insurance on specific items. I think that sort of thing is far too embryonic and needs to be a lot more advanced if the industry is going to truly thrive. If the industry can follow the lead of a few, align the cultural changes and find better agility, and I think an entrepreneurial spirit is required to do that, then I'm fairly certain the industry will innovate and capitalise on the immense opportunity that is now here upon us.
Thanks, Mark. Got an interesting question here for Mark Andrews. With Samsung showcasing Bixby and Google releasing their Home AI, where should insurers focus their AI investments specifically towards, i.e. quote and buy, policy serving, claims, etc.? What do you think, Mark?
So I spoke a little bit about some of the claims advancements and some of the straight-through processing there. Policy servicing is an interesting one. So I wonder how much customers are just phoning just for queries on what coverage what coverage they've got or what their policy covers. Yeah, I can see that being something that can be done in the future, certainly. Quote and buy as well, possibly an area you want to keep a bit more control on. So I think policy servicing is a key one. That'd be a good area to focus on.
Thanks, Mark. We've got a question coming in that I think would be most appropriate for Dror, seeing as he's our InsurTech representative on the panel. How critical is machine learning, an important part of AI, for InsurTech at large?
I would say that machine learning is probably a technique, and the question is usually not what the technique you use, but what's the business value that you want to get. And if you start with a business question or a business goal, for example, you spoke earlier about claims, but we can speak about customer journey, we can speak about customer's value, we can speak about underwriting, we can speak about financial reporting, etc. Then it comes a question of what should be the right technique to use. Having machine learning with tons of flavors from the traditional statistical methods to neural networks and all the new skills, and some of them might fit for specific cases and some not. And I think going into this technical question is not what interests me most. I think what's the key question should be is what's the business goal your business want to achieve, and then finding the right method to answer that need.
Thanks, Dror. A question for Mark Broadhurst here. Are we in a hype cycle with lots of companies claiming to do AI that are not?
I think we are, to a certain degree. I think it's a fair challenge. I think to say that we are at the end game for artificial intelligence would be wrong. We're definitely at the embryonic stage. I think the perfect storm that I covered earlier is evident of how quickly the market is transforming. I think I sort of covered the main reasons as to why I think the perfect storm is upon us. But I think we are in a bit of a hype stage. And I think one of the reasons we are in a hype stage is because the underlying legacy platforms of a lot of these companies and their own data sets that they already hold, and even things such as single customer view of those customers, isn't there. And I don't think the processes are there. I don't think the culture's there. And again, you can have all the fintech innovation in the world. If you don't change the fundamental foundations of a business, I think we are probably a bit of a journey away from that sort of perfect position. So I would probably agree with that. I think it is a bit hyped. I think it is something which is not anywhere near as developed as it will be, but it's coming. It will happen, and if we ignore it, like Hackney Carriage did with Uber, it will decimate the industry, in my opinion.
Thanks, Mark. Mark Andrews, here's an interesting question. Would you have any concerns with robo-advice becoming depersonalized and as a result potentially leading to poor customer service? We already see automated recordings which can frustrate customers because the options they seek are not available, ultimately leaving the customer speaking to a human anyway. Is this a concern? I think we may have lost Mark there. Would anyone else like to pick that up? Mark Broadhurst, do you have any thoughts on that question?
Can you fire that again? I was waiting for him to... Can you fire that one again at me, Ocean?
Would you have any concerns with robo-advice becoming depersonalized and as a result potentially leading to poor customer service?
I think robo-advice is extremely dangerous. It's something that, if done by a half measure, it will create a major problem in the industry. I think the problem you've got is twofold. One is these customers are disintermediated already, so they're not getting any advice. They're being completely left to their own devices. And I think if you look at the market, let's be honest with each other, the industry is pretty much focused on distributing products on push platforms. They're pushing products to customers, almost sheep dipping. So if they're disintermediated from advice, robo-advice should be able to plug the gap, particularly on simplified products in that marketplace. But I think only until companies invest in pool technology and pool platforms to actually really utilize the power of data and artificial intelligence to really understand the customer's life cycle and the customer's financial goals, will robo-advice really become the perfect storm in the financial advice market. I think until then, there is a danger that it will provide limited power if it doesn't embrace all of the financial factors of one's assets and liabilities.
Mark, we've been rejoined by Mark Andrews. Do you want to add your thoughts to Mark Broadhurst?
Yeah, apologies. So I think Mark covered a lot of it, but certainly some of my colleagues who are working in the wealth space are finding robo-advice actually quite restrictive in what it can offer. So I think Mark covered most of it, but yeah, I'm not sure quite how far it can really go or how far the regulator will let it go.
Ocean, just to add one last comment on the same theme, I think what we are seeing is the blended advice models becoming the winners in that space. So the companies that are using artificial intelligence and robo-advice to actually automate a number of the processes, but using a human interaction to complete that transaction, are the ones that are winning. So I think in reality, to answer that, there will be I think the blended model will be the winner, personally. So, some people will disagree with that. I would say that was more likely.
Perhaps a final question for Dror here. Dror, your thoughts on how quickly will companies that choose not to invest in updating their technology infrastructure now fall behind in the future?
I think the companies that decide not to follow the trend might find themselves lagging behind quite fast, because you see Mark was speaking a lot about the perfect storm. You see a lot of trends coming into the system, into the industry. You see the customers looking forward to get products that are personalized, to get much better service, and you see that I would say, nowadays when you speak about millennials and you speak about the new customers, they are not going to be forgiving. So I think the companies that are not willing to put money on upgrading the systems and going into either AI or some other way of getting better would find themselves quite fast lagging behind.
Great, thanks. Perhaps we'll wrap up with this question. What one piece of advice would you give an insurer who is thinking about the next steps they need to take now to exploit the opportunities artificial intelligence represents? Mark Andrews, would you like to give us one or two sentences on that?
Sure. So I think keeping with the legacy technology theme, simplifying the estate essentially, not just the technology but the product portfolio as well. There's some complexity in the product portfolio. I think is preventing some insurers from really pushing forward. And the other thing is to do some research and seek some of the technology partnerships out there. There's lots of good tech out there. Don't try and do it all yourself.
Dror, your advice for an insurer?
So obviously I would advise to use Atidot. But besides that, I think one of the key differentiators that might help the companies to understand who helps them and who doesn't is asking themselves, who of those AI companies, machine learning companies, provide them with something that answers their needs, something that speaks their language, someone that knows insurance, that understands the complexity they face, and help them run their business. And I think if you keep that as your KPI, you might find yourself with a much shorter list of companies competing for improving your business.
Finally, thanks, Dror. And finally, Mark Broadhurst, do you have any advice for the insurance industry?
Yeah, I think if I was to give sort of break this down into a couple of points, I'd say the first thing they could do is have an artificial intelligence strategy, and that needs to include everything. So technologies, data, processes, assets, and more importantly, the people themselves in a completely holistic ecosystem. I don't see that. I really don't. They need to foster a culture of innovation. Again, I'm not seeing enough evidence of that. There are a few that are bringing in people. I think they need to create much more agile financial models. The ones that are still in place following the financial crisis are not aligned to the pace of change. And whether that means setting up hubs, as I covered earlier, or marketplace subsidiaries and satellites, then perhaps that is it. I think people need to accept that artificial intelligence isn't another species. I think it was created by humans, and I think we can use it to empower humans rather than focus on removing them with these new technologies. And I think those that do that well will be the biggest winners.
Great, thanks, Mark. For anyone who asked a question but we didn't get time to get round to it, we'll be in touch with some follow-up content. That's all we have time for, I'm afraid. Thanks for joining us today, Mark, and Dror. Very excited about seeing you all at InsurTech Rising in October 2017 in London. To everyone listening, you too can see innovation in action with over 100 InsurTech demos in InsurTech Rising, where insurance's digital leaders, C-level executives, tech entrepreneurs, and investors all meet under one roof. If you have any feedback on today's webinar or any recommendations for future webinars, please do complete our short survey at the end of this webinar. It should flash up on your screen shortly. Thanks and goodbye.
Thank you.